Hello everybody, welcome back to the channel. I have an amazing video for you guys today. I found an article that you guys are going to absolutely love. It is coming from cnbc.com and I will have a link to this article down in the description below. And we're gonna go ahead and talk about this article and match it up with the Redfin weekly housing data. Now check this out. Home prices cooled at a record pace in June according to housing data firm. Now guys, if you've been watching my channel and you know what I've been talking about, is that we are seeing a crazy slowdown with the higher rates coming from the feds. It is making, is creating less and less buyers and turning the market, the housing market, we're going very quickly from a seller's market now to a buyer's market, right? Why? Because there's less buyers and there's more sellers at this point, and prices are coming down really fast. Look, check this out. Home price gains are cooling fast as demand wanes and supply builds. The annual rate of price appreciation fell 2 percentage points from 19.3% to 17.3%. Price gains are still otherwise strong because of imbalance between supply and demand, and the housing market has had severe shortages for years. So what is happening, right? Overall, you might sit there and say, hey, I don't believe you. You're talking about a crash. There's no crash. Houses are still super expensive. What's happening is this, okay? We have a very low supply problem right now. The supply is so low that it's propping up the housing prices pretty high. Here's another problem, is that because of inflation, right? The home builders don't want to build because the land, for one, is too expensive, and materials and employees are too expensive, right? So now the home builders are basically, they don't want to be building a house when the market is starting to crash, because they know that they're going to be sitting there underwater on houses they just built. Let me give you an example. I think something like the average cost to build a 2,000 square foot house in the United States right now is something like $400,000 or a little bit less. And you could see certain houses, depending on what material they use, they could probably bring those costs down. But when you have a house that now, if you cannot sell that house basically for what you put into it and the land, then you're just not going to build. So builders are stopping right now. They're slowing down. They're not stopping. They're just slowing down. And that's creating more of a crunch. Now, where can we see, possibly inventory start to loosen up? We're going to start seeing it if foreclosures start going up. That means if the economy really takes a turn, if this inflation is really hurting people and basically people don't have enough money to pay their mortgage, we're going to see situations where if foreclosures go up, then we are going to have higher inventories. One of the good things about foreclosures going up, and I mean, it's sad for people having to lose their house, but on the flip side is that sometimes foreclosure houses tend to bring the value of the neighborhood down. Why? Because they tend to be houses that might not necessarily be upgraded. They might have a lot of issues inside of them. If people can't pay their mortgage, in some ways, they're not putting in new kitchens and new bathrooms and updating the floors, right? So the houses tend to not look as nice, and then the banks have the banks basically have an incentive to get it off their books and liquidate it, and they rather take a small loss than hold on to that property longer and longer because the price could keep dropping and dropping. The point is that basically what I'm saying is foreclosures, because of the quality of the house, they end up bringing the whole market down in that neighborhood. So that could be somewhere where we can see some changes. Now look, I want to talk about Seattle real quick. Check this out. This is the median sale price in Seattle. This is a Redfin weekly housing data. I have a link I have a link down in the description if you want to check out this data. But basically, look, in 3 years ago in 2019, houses were 574,000 and they jumped all the way up to 800,000. Okay, that's like 300. That's like almost $220,000 difference. That is a huge jump, and the reason was because of the low interest rates and record low supply, right? Now, if we look at this article, check this out. Look at this. In Seattle, prices are down 3.8% in the past 2 months, or a $30,000 reduction. San Francisco, San Diego, and Denver round up the top 5 markets with the biggest price reductions. So we're seeing price reductions, okay? We are seeing, pending sales falling below, okay? There's less pending sales now than they were in 2019. 2019 is our average. Now we have less sales because basically people are being priced out. New listings are in line with 2019, okay, which is good. But what we need, if we really want the housing market to slow down and basically make it affordable for a lot of us, we need more supply, okay? And right now the supply is tight. So that's what's keeping up the prices. Like if we look at the new listing house price, they are trying to hold that line. Look at that. Now this is again 2019. This is normal levels where it should be closer to this line. But look how high it is right now, right? And this is a huge problem. And one would argue that 2019 was inflated to begin with. So technically, we're way inflated right now, and something's got to give. But here is what's giving, right? If you actually look at the median sale price, okay, the sale price, the actual, not what they're listing it, but what is actually selling is on its way down, okay? So that is a good indicator that things are gonna go back to normal, but it's not gonna be overnight. We need this to, keep dropping to where it's closer to this blue line. Now, that's what's happening, okay, guys? If you're in the Seattle area, things are starting to look good. If you're a seller, my suggestion is your window is closing fast to get, these record high prices for your property. If you are a buyer, just wait, because you're going to have amazing buying opportunities. So again, it's right now, I believe the hump is the peak is behind us, and right now is definitely I would say it is a buyer's market. Absolutely 100% buyer's market. And the buyers right now are not going to bite. They're not going to bite until these prices keep going down and down. So it's going to be super interesting to see how this all plays out. Now, guys, I want to just say a incredible huge thank you. I just started this channel and I am getting so many likes, so many good positive feedback, so many comments, and I'm getting a lot of views, and it feels really awesome. And I want to just say thank you so much for all the support. Now, if you guys like my videos, don't forget to smash that subscribe button and go ahead and like and leave a comment. You guys are the best. I love you guys, and I'll see you on the next video.